Welcome to the September edition of Money, Markets, and More. We hope you guys are all doing great and hopefully looking forward to some cooler temperatures that we have coming here pretty soon. September is Life Insurance Awareness Month as well as College Savings Planning Month. And so we thought it'd be a good idea to touch on both of these issues as well as give you guys a market update. So let's first start with life insurance. We always think it's a great idea to review your current coverage. And the reason we say that is because a young working couple with children, maybe some debt, is going to have different needs for coverage than a retiree. And sometimes we get, kind of stuck in the rut of just paying those life insurance premiums and not really going back to make sure that the coverage we have matches our current situation. So again, always just a good idea to go ahead and review what you currently have and make sure that it's in line with what your goals are. The second topic this month is College Savings Planning Month. One of the best vehicles that we think that parents and grandparents can use to save for college education is a 529 account. And what these accounts will allow you to do is to get tax-free growth on your investment, and you're not taxed when you pull that money out if you use it for qualified higher education expenses. So again, this vehicle or this type of an account we've seen become really popular with parents and grandparents that are looking to save for those costly and very expensive higher education costs. So with that, I'm going to go ahead and turn it over to Callan to give you guys a market update.
Thank you, Heather, and thank you for joining us again for Money, Markets, and More. I want to talk a little bit about the change in Fed policy that they've instituted recently. The Fed decided to pause for the month of September, but indicated that they might raise rates again very, very soon. And what a lot of Fed governors are talking about now is the higher for longer stance, where they'll leave rates higher for a longer period of time than the market is thinking to combat inflation. We're still seeing inflation stubbornly high, although it's come down, but in areas like of energy and food prices that really affects the consumer. So what does this mean for you? Well, the 10-year Treasury has gotten to a high that it has not seen since June of 2007. And if the Fed is really going to raise one more time or so, even if it's multiple times, we're getting to the point now where we want to lock in those higher rates. So at Trend Financial, we're thinking about adding duration back into our portfolio, taking our short-dated securities and making them intermediate term securities. That way we can take advantage of when the Fed does decide it needs to lower rates, whether it's the economy, whether it's from a recession or from a decrease in inflation and they want to normalize rates, we'll be able to take advantage of that. Our real opportunity right now is in fixed income. The stock market has kind of stumbled here the last couple of weeks. Historically, September and October are very tough months. And specifically, the second 2 weeks of September and the first 2 weeks of October have always been a very difficult time for the stock market. We know these higher rates are going to affect the consumer, they're going to affect corporations' earnings, and we certainly do expect to see a slowdown in the economy coming from this. That's going to filter through to the stock market. So going forward, we see a great opportunity in fixed income. We see a leveling off in the stock market. Doesn't mean we won't make money if we go into a recession. Historically, we have still done well in a recession with the stock market, but it doesn't look like it's going to do like it did the first half of this year. So thank you for tuning in to Money, Markets, and More. We'd love to hear from you with any questions that you might have.